I love being a dividend investor because whether there is good news or bad news, it is always all good news for dividend investors. So I've got some critics out there. I've got some critics who have been commentating and they've been sharing some insights about some bad news that has been hitting some of the personal stock positions that I hold. I want to take some time today to address some of this bad news and share with everyone why for dividend investors, especially those appreciating the thug life, this bad news, it's actually really, really good news. So let's get started. So it's funny in the world of investing, the way I approach dividend investing, oftentimes it's a paradox. So I'll link in the description below. I just did a video about my top 5 stocks of all time. I shared number 5. And the reason I did this video is I wanted to illustrate to everyone that regardless of market valuations, prices, etc., it's important as a dividend investor to pick the top 5 so that I can always stay focused. I can always stay focused on those 5 positions that are most important to me. And quite frankly, regardless of which market we're in, whether these stocks are on sale, whether they're trading really lofty valuations, I always want to keep in the back of the mind what my top 5 picks are so I can stay focused. So that's one way in which I approach dividend investing. It's kind of a flight towards quality. I love quality. I love my top 5, and I'm willing to pay up sometimes for quality, at least through dollar cost averaging in. Now, paradoxically, at the same time, you guys know sometimes I own some deep value plays in my portfolio. And I'm not a deep value investor where I seek out value and then I want to sell when it recovers. No, I seek out deep value only if it overlaps. It completely overlaps with a position that I want to buy and hold forever. And so I've done some videos about this. I'll link in the description below. It just so happens that 2 of my deep values that I'm looking at in 2018 are IBM and Campbell Soup. And these are stocks that have hit hard times. They are not doing very well. And oftentimes when there's a lot of pessimism, I like to take a look at certain positions and see if they make sense for me, if it's the right time to buy, it's the right time to average in, it's the right time to expand my position in these value plays. And again, this is in the minority of my portfolio. Both of these positions have a weighting in my portfolio of under 2% each. They will not, in my opinion, unless they recover and grow substantially, I won't be allocating right now in 2018 more than 2% to each of these. In fact, I'm going to keep them both quite a bit below 2%, but they have a time and place in my portfolio, and I own 38 stocks, so it's okay to play the paradox. It's okay to have the top 5. It's okay to have some of the deep value as long as the deep value overlaps with stocks that I want to buy and hold forever. And so I like owning these stocks, especially IBM, because it gives me representation in technology, which is much needed. Outside of my angel investing portfolio, I don't actually have any pure play tech companies in my dividend portfolio except this one. And Campbell's Soup, I like that because I quite frankly think it's a really nice company in terms of the products that they have. I think they have a good niche, a good suite of products. I think the company has had some management challenges, some growth challenges, but it will get resolved. So I want to jump into this bad news today. What happened with IBM? Okay, a month ago I covered it. I will link in the description below. At the time, I believed it was a deep value. I still believe it's a deep value now because it's trended down more. It was at 145.97 when I covered it a month ago. Now it's at 130.55, so it's down 10%. It's so funny. I have a commentator who said, Ian, I told you so. They came back to this video and they're like, I like to come back to these videos and see how these things did. I lost 10% in 1 month on a stock that's less than 2% of my portfolio. This is so insignificant, so insignificant, but this is what the naysayers, the critics will say about dividend investors. I am pointing this out because I have a community here. I'm creating this community for a reason. We're going to talk about this later, but as a preview, it is so important to tune out the naysayers. It is so important, especially when one is going after value plays, because value by definition It's not going to be pretty. It's not going to come when, oh, everyone loves IBM, everything's great. No, it's going to come when everyone hates the thing, and that's what's happening now. Their revenue is down 2% year over year in their latest quarterly report, and this sent the stock just tanking. And the reason for this is in the quarters prior to that one, revenue had been notching up. So they had broken the trend. Revenue is now down again. However, it's not as bad as it looks, because when one adjusts for currency fluctuations, especially because the huge percentage of their business is done outside of the United States, it's actually flat. Revenue is actually flat when it's adjusted for such fluctuations. Anyways, the report was not received very well by the Wall Street, the critics, the analysts, etc. Stock is down 10% since I covered it a month ago. And you would not believe what people are saying out there. People are saying, hey, this is the Sears of technology. This is going to go out of business. They couldn't possibly cover their dividend anymore. There's no way. They're going to have to cut it. Ian, your dividend, I had someone go as far to say, it was the same person, dividend investing, Ian, I told you it doesn't work. Because of this one case, a stock I own, 2% of my portfolio, less than 2% of my portfolio is down 10% from where I was covering it a month ago. Oh, dividend investing doesn't work. I told you so. You better stick to those FANG stocks. And I'll tell you, these critics, they often come. It's these people who don't have much experience investing. They've been doing it for maybe 5 years, and they just go towards the FANG stocks. And that's their worldview. Oh, IBM's not in the FANG. It's not going to work. Dividends don't work. Couldn't be further from the truth. Anyways, I'm not going to sugarcoat it. Certainly, this is a company in transition, and this is what is characteristic of deep value. When deep value presents itself, it's not going to be easy. Everyone's going to be saying bad things, and quite frankly, I actually just put it in order to buy more. I felt a little uneasy. I felt a little uneasy just because there's so much skeptics, so much skepticism, but I know if I feel a little uneasy when I'm making that buy order, that's what deep value does to you every time. That's deep value. That's the game. And deep value, you may want to ask yourself, if you're a dividend investor, I don't know if you have 38 stocks like me. I know some of the people here have more, some have less. If you have a smaller portfolio, maybe this kind of thing doesn't have much of a place. If you have a larger portfolio, more established, maybe there's a portion of your portfolio that makes sense to carve out for deep value. I don't know the answer. For me, I have a portion carved out for deep value. That's where I place IBM. Probably one of the riskier stocks that I own, if not the riskiest in the dividend portfolio at least. But look, even if it goes to zero, I lose it all. I'm losing 2% of my portfolio, or less than 2%. So that's how I look at it, is I can certainly stomach the risk as long as I allocate my percentages correctly. Anyways, by the way, I don't think that's going to happen. So revenue was down, earnings per share was up 1% year over year. I spent so much time looking at this earnings report, looking at the commentary, everything. As good as I can tell, the business is doing just fine. There's people that will nitpick it. Businesses don't just go straight up, especially a business in recovery. It doesn't just turn the corner up, straight up. There comes volatility. A business is just like the stock market. There's ups and downs as it pertains to revenue and earnings, especially a B2B business like IBM that relies on signing large contracts worth millions and millions of dollars with enterprises. Those contracts, sometimes they'll roll in one quarter, not another. Sometimes just the timing of them, they don't all get signed until the first day of the next quarter. There's inherent volatility. Anyways, let's just start with some of the basics. The dividend per year right now is $6.28. If I take that and I divide by the share price, the starting yield now is 4.8%. 4.8%, and they're growing the dividend really quickly. I love that. Now, the critics are saying, hey, this dividend, it may not be covered anymore. They're going to cut it. This couldn't be further from the case. IBM actually just said, hey, our earnings per share target of $13.80 for the year, we're going to at least hit that, if not exceed it. So yeah, their quarter was a little lackluster, but they did reaffirm the earnings for the year. And so the earnings for the year are $13.80 for this year, and the dividend is $6.28. All I do is I take the $6.28, I divide by the $13.80, and I get my payout ratio. Payout ratio right now is 46%. It's not 100%. It's not over 100%. It's 46%. I think 46% payout ratio for a company in transition is a respectable payout ratio. I think they'll be fine paying the dividend as long as the company continues to kind of stay flat or even grow from here. I don't see a problem with that. So the naysayers just jumping out and saying that they're going to have to cut the dividend, I don't see why that would be the case here. Payout ratio is just fine. So also, let's look at the PE. 130.55 is the current share price. I divide that by the same $13.80 they're going to hit for this year, or they said they'll hit more. The PE on a forward basis for this year is coming in at a 9.46. So IBM's PE ratio now is below 10. To me, this is a deep value buy signal. I'm really excited. Like I said, I'm buying more. I've actually been averaging in this year on and off. Right now, the position's kind of at the point where it's getting to the size where I don't want to add too much more. But with a drop like this, I went for it. I'm doing more. And so, and what drove me really was the starting yield of 4.8% and the PE of 9.46. So worth mentioning as well, they're driving $12 billion in free cash flow estimated for the year of 2018. So some insights here, a few insights. Like I said, investing in dividends, it can be a paradox. There's kind of the top 5 stocks or top 10 where they're just so easy. I'll buy when they're doing well. I'll buy when they're not doing well. Any market, I'm kind of averaging in. I sleep at night. I never worry about them. Even if I'm paying more than they're worth, don't worry. That's most of my portfolio, quite frankly. But I do have a paradox. I have part of my portfolio where I've got some deep value, and these are some examples. And playing with deep value can be a little scary. It's a lot more volatile. It's characteristic of a more mature portfolio. Anyways, with deep value especially, I like to dollar cost average. So back when I was covering this a month ago, did I just put all the money I ever had to invest in IBM in it at once? No, I've been averaging in. I've actually been averaging in before then as well, but I like to dollar cost average. And I always talk about dollar cost averaging here. It becomes even more important with a deep value situation because it helps one mitigate risk. Stay true to the position size. Here's the thing though. What if I'm wrong about IBM? Maybe I am. Maybe I am wrong about IBM. I don't know. I don't think I will be because I'm looking at this for 20 plus years out, 30 years. There may be some tough years here, but boy, I'm going to be happy. I think I'm going to pat myself on the back 30 years from now, 20 years from now. I am going to be happy about this one. That being said, I need to be true to my position size here. I've already stated I don't want this thing to go much above 2% of my portfolio. It's not at 2% now. It's at 1.8 or so. And so, yeah, I got some room to buy some more, but do I want to go too heavy in it? No, I need to be true to the position size. So with deep value especially, no matter how low this thing goes, at a certain point, I don't want to add too much more because maybe I am wrong. And quite frankly, there's risk associated with deep value, a lot more than my top 5 list of stocks in my humble opinion. That being said, I can mitigate the risk by averaging in and being true to my position size. And I've stated I just don't want it. I write these things down for myself. And so I don't want it to be above 2%. Something else. Oh, I talked about that. Deep value, a lot different than top 5. I want to talk about this pessimism and doubt though. In the world of investing, you're going to run across this. You're going to run across it at the water cooler at work. You're going to run across it on the internet. There on the internet, in forums, online, sometimes you will run into pessimism. And the pessimism may come in many ways. It may say, boy, IBM, I just don't like the company. I hate the company. If you buy the company, you're bad. You're a bad investor. There's other types of pessimism that might come. Oh, you're investing for dividends. You're trying to improve your life. You're trying to drive cash flow. You're not going to succeed. That's not possible. Look, IBM, they're going to have to cut the dividend is what they say. How could your strategy possibly work? There are so many pessimists out there. They don't want you to succeed. They don't want me to succeed. I'll tell you, I uploaded my last video. Within 1 second, the first response it got was a thumbs down. There's someone put a thumbs down probably before watching it because there's naysayers out there. They just, for whatever reason, do not want to see other people succeed. And so, because that's the world we live in. Quite frankly, that is one of the reasons that I created this channel. I am trying to create a community here of support where dividend investors have a place to go and support each other, because dividend investing does work. I'll link in the description below about my jackpot situation, where I literally hit the jackpot with a dividend growth stock, and I've done that more than once. But I share one of my favorite examples below. You'll check that out. You'll love it. And that's actually how I responded to that one naysayer. Is I'm like, hey, check this out. Have you done that? We'll see. So be careful though, because if you're just getting started out with dividend investing, it requires stability. It requires persistence. It requires many years at the game. And so you just can't let the naysayers in, the critics, the pessimists, let them do their own thing. Wish them well. I actually wish them well. I hope that they do well. I hope that their attitude improves over time, that they learn, and hopefully they're just going through a challenging time, and the pessimism is a reflection of the challenges that they're facing, and hopefully they overcome those challenges and do great. But don't let the pessimism get you down, and find your community. And quite frankly, if you're new to dividend investing and you're just getting off the ground floor, maybe keep it to yourself. Keep it a little quiet. Guard your dreams closely, and don't let anyone mess with your dreams. That is one of the key things that comes out of all of this type of stuff. But net, this is bad news. I actually look at it as good news. I enjoyed buying this thing in the 140s. I definitely enjoy buying it in the 130s. And if it dips into the 120s, I will buy more. And so the beauty of dividend investing is when a stock goes down, starting yield goes up. So it's quicker to reach financial freedom as long as one is buying a stock where the dividend is sustainable, which I believe it is with IBM at a 46% payout ratio. Very well diversified business-to-business company, many lines of business, many customers, many patents. Doing quite well in my opinion. There's a debt issue with them, but quite frankly, I think the debt is overdone, because the lion's share of that debt is from their financing division, where they're financing people to buy their really expensive products, such as mainframe computers, for example. And so anyways, payout ratio is fine. And so when the stock price goes down, starting yield goes up. So bad news is good news. Bring it on. Good news is good news too. Stock prices going up, companies doing well, companies raising dividends. That's good news. But the beauty of a dividend investor is I get to enjoy the good news and the bad news. And the bad news is good news for me. So I love that. I love that about dividend investing. So some more bad news. Let's talk about Campbell's soup. I started covering Campbell's soup here on my channel a while ago. I've been in this stock for years. And right now it's at $36.67. When I covered it back in May, it was at $34.37. So what was interesting though, it went from 34 when I was talking about in May, bumped way up into the 40s, the low 40s. Now it's come back. Why is it coming back? There's this proxy battle. There is a activist investor, Third Point Capital. They've acquired 7% of this company. They're trying to get rid of the board. They're trying to replace the board. They're trying to sell the company. They're trying to extract shareholder value. Meanwhile, the incumbent board is saying, no, Third Point, we're not going to work with you. We want to stick to our strategy. We want to continue to operate as a company. Sure, we will explore options, but what you guys are suggesting, Third Point, is just too out there. And so because there's this proxy battle, there's different proxies coming into the mail to shareholders, one from Third Point, one from the board, asking you to vote different ways. Basically, it has created a lot of uncertainty, and with that uncertainty, the market does not like uncertainty. IBM certainly has some uncertainty, revenues down a bit year over year, and so the market doesn't like that. Stocks go down. Bad news, in my opinion, creates a buying opportunity. And so Campbell's soup, I don't know if I'll buy more here. If it's got to go lower for me. It has to go to the real low 30s. But if it gets down like sub $33, I'll pick up a few more shares. I don't want it to be over 2% of my portfolio. And this one right now, for me, I don't remember where it's at, but I think it's smaller than IBM. So I'm not really concerned about that. But I'll be dipping my feet in the water here and buying some more shares. No problem if it gets a little lower. And so again, uncertainty, it's hard to live with. This type of investing is so much more difficult than buying like my top 5 stocks. So much more difficult. gets more emotional. The doubt comes in. Even without the naysayers, you start doubting yourself sometimes. You start even reanalyzing. I spent a lot of time analyzing IBM, and I just look, have I made a mistake? Did I miss something? And so you start doing that kind of stuff. But at the end of the day, if you can get beyond the doubt, you can buy when there's deep value. A lot of the time, this is where the real money is made. This is where a lot of money can be made because, look, I'm buying IBM at a forward PE under 10, and paying a dividend of 4.8%, 12 billion free cash flow. Let's look around to the other tech stocks out there, the high-flying tech stocks, and see how they stack up against those kind of valuation. They're not even in the ballpark, and so certainly they're growing quicker, but they don't have that kind of valuation. And so that's deep value investing. That's bad news investing. I like my bad news. I like my good news. It's all good when you're a dividend growth investor. So I'd be curious what you think about there. What do you think about IBM? What do you think about Campbell Soup? Do you ever invest in these kind of value plays that also you might want to hold for the long term? These certainly are buy and hold forever for me. I'm not going to sell them. But they're certainly different than my top 5. I'd be curious, do you just go flight to quality? Do you do a little bit of value? Do you do it all like myself? I'd just be so curious to see how you guys all approach this situation, what you think about these stocks. Definitely not for everyone, but a fun element of my portfolio. So hey everyone, 15,000 subscribers here strong. Awesome community. I love you guys. If you enjoyed the video, please subscribe, like, comment. All of that means the world to me. Head on over to Instagram. I'll link in the description below. Follow me there. A lot of good insights there as well that complement this YouTube channel quite well. Would really appreciate. We're going to be hosting a meetup at Starbucks Reserve in San Francisco. I own Starbucks. I love my Starbucks. Another one where the critics, for whatever reason, they don't like Starbucks. Awesome. Anyways, I'll link in the description below. I'll pin a comment below. That meetup is coming up. I want to do a last round here of gathering attendees before we decide on the final date. It will be in November, and we're going to talk about dividend investing, passive income cash flow, driving cash flow that can literally be used to pay the bills. Before I leave today, in terms of a full disclosure, I own the stocks mentioned today. I am long. I own stocks, shares of IBM, ticker symbol IBM, Campbell Soup, ticker symbol CPB, and Starbucks, ticker symbol SBUX. I own those in my personal stock portfolio. In terms of a friendly disclaimer, I'm not a licensed investment advisor. Today's video is not investment advice. Today's video is just for your fun and entertainment. If you're going to go out and invest in the stock market or anywhere else, please consult a licensed financial advisor first. Thanks again, everyone. I will see you in the next video.